Thank you for attending the Cannabis Investor Webcast. I would like to thank our platinum sponsors, Lexaria Corporation and Viridian Capital and Research. Please view the Viridian Cannabis Industry Report, which can be found on our website or at viridiancr.com. Please type any questions for the presenter in the questions box. Our speaker today is Adam Laufer, CEO of MJ Holdings. I will now turn the screen over to you, Adam.
Thank you, Derwin. Good morning. My name is Adam Laufer. I'm the co-CEO of MJ Holdings. Before we begin, I'd like to thank Derwin Wallace and the team at Cannabis Investor Webcast for hosting us all. Today I'll be sharing some information with you about our company, what we've accomplished to date, as well as what our plans are for the future. At the conclusion of the event, I'll take questions from the floor. Before I get started, a little legal housekeeping. For those of you who are listening and don't have a screen in front of you, this presentation includes forward-looking statements within the meaning of the safe harbor of the provisions of the United States Private Securities Litigation Reform Act of 1995. The statements contain certain risks. For more general risks and complete risks, please see our SEC filings. As this presentation will be posted, we obviously will not have the opportunity, nor will we be updating the presentation. So, about us, we're at MJ Holdings. We acquire and lease real estate to licensed operators. We also provide tenant improvements and allowances, which we capitalize into our leases. As many of you know, since marijuana is still illegal under federal law, banks will not underwrite loans for licensed operators. Moreover, commercial landlords are at the risk of having their loans called if they show a marijuana tenant on their roll. This challenge for licensed marijuana operators is our opportunity. Additionally, MJ Holdings plans to explore ancillary opportunities in the regulated marijuana industry, and we will not, until such time as it's federally legal, grow, harvest, or distribute marijuana or any substances that violate the laws of the United States of America. Since we began operations in the second quarter of 2014, we've acquired 2 buildings, both in Colorado, a 22,000 square foot warehouse in Denver, and a 25,000 square foot piece of real estate which houses a 2,500 square foot retail freestanding building which houses a retail dispensary. A little bit about us. My name is Adam Laufer. I'm a corporate securities attorney. Prior to founding MJ Holdings with my co-CEO, I took public the first electronic cigarette company, Vapor Corp, in 2009. I worked at the company as director of corporate strategy until 2013 when I left the company and started looking for my next opportunity. It just seemed like this marijuana industry was natural. It had the same type of growth opportunity as I saw in the electronic cigarette space. And I ended up reaching out to a close friend of mine who became my co-CEO, Sean Shemtov. Sean is a hard money lender and is the CEO of Shemtov Mortgage Group, or CMG Capital, in South Florida. And he's the largest hard money lender in South Florida. He has raised a portfolio and manages a portfolio of around $75 million in short-term hard money loans, and we got together and determined that his investor network would likely be very interested in the opportunities that we identified and were the reason for forming MJ Holdings. We have a great support staff, which we've been able to assemble, mostly in Colorado at this point. We have a terrific law firm we work with, regulators, consultants, and realtors. Among them we have Matt Cook, who was the Director of Revenue for the Department, was the Executive Director of the Department of Revenue for the state of Colorado. He was the first bureaucrat. He wrote the marijuana laws and was the first bureaucrat charged with enforcing them. We rely on him for regulatory input. Our lawyers include the former Denver City Attorney. We work with Colliers. And we've also been fortunate to have a relationship with Medbox. Here's a little background. We acquired controlling interest of the company in around February 14, 2014. We conducted a private placement shortly thereafter and raised $1.6 million in a private placement, which gave us some initial capital to begin the business. Sean and I then took a trip out to Denver and started getting acquainted with the industry and the parties. We acquired our first piece of real estate, which was a 22,000 square foot warehouse facility on Joliet Street in Denver. I'll give some more details shortly for that. We ended up signing a term sheet on August 29, 2014 with a well-known dispensary group. And why I've included this and why it's relevant is that we're not looking just to buy properties, we're looking to develop relationships. And with each relationship that we develop, we want to be their financial partner. We want to help them expand their business. And on top of that, we ask for a first right of refusal for any future financings, not just on the retail side, but expansion capital as well. And while we can't take advantage of that, while marijuana is still illegal under federal law, and while there still exists state residency requirements for equity holders, it gives us an option to be able to get more embedded in the business over time, which is something that is valuable to us as we see the opportunities far beyond real estate. Additionally, having a term sheet with the tenant group brings down transactional costs, as we do not have to renegotiate leases. We can use the same lease template, and we would also not be have to face commissions, realtor commissions, on each subsequent property. In September 24th, we acquired and leased a property on Havana Street to the party that we executed the term sheet with. And then the following day, on September 25th, we actually entered into a lease agreement on our Joliet property. And so, to this point, I think it's, in a very short period of time, we've been very effective in executing our business plan. To date, looking at the competitors, the specific direct competitors, which are Advanced Cannabis Solutions, Zone Properties, and Cannabis RX, we actually have more revenue-generating marijuana properties than any other parties, and we are the newest entrants into the field. A little bit about the Joliet property. We acquired it in June 19th this year for $2.2 million. We bought this property on spec, and on spec began the power upgrade, which has been recently completed. The building is a Class A piece of industrial property, solar panels installed on the roof, which power the office portion of the building. The rest of the power obviously is used for cultivation in the growing capacity of the building. We've leased the building for 7 years with additional options. On this building, we're receiving a 14% return on capital, and we built in 2% annual rent increases. Our Havana property is one of 24 properties that has a license to do retail in Aurora, Colorado. The tenant has several other properties and is a very well-known and well-regarded operator in Colorado. We have included a tenant improvement allowance of $150,000, which we capitalized into the cost, and we're receiving a 15% return on capital on the $906,000, and we are charging 3% annual increases on this property. Moving forward, we plan to continue to focus on our core business, which is acquiring real estate and leasing it to licensed operators. We do this in one of two ways currently. We either use cash on hand, and or what we do is we look to issue promissory notes to finance the buildings. In that instance, what we do is we identify a building. Well, let me take a step back. We either do it one of two ways. We'll either buy a building on spec if we think it's a great opportunity, and or our preference is to identify a tenant in advance, have them identify the building. In most cases, they'll have actually entered into a purchase contract on the property. They'll assign the property to us once we've pre-negotiated a lease. We'll then acquire the building, and they'll move in and the lease will begin. And so in doing this, what we'll do is we'll either use cash on hand, or we'll look to our investor network. We'll raise the money through the issuance of promissory notes to purchase the building. The lease payments will cover the debt service, and then we'll keep the spread. Additionally, what we do is we will securitize the note with the underlying property, which makes it more attractive, obviously, for our investors, our note investors, as opposed to our shareholders, and begin generating revenues through the payments of the rent roll. We see the next paradigm in grow centers or cultivation to be greenhouses. Greenhouses are much more efficient in growing marijuana and cannabis. Costs for growers could go down as much as 50% due to the reduced requirement for electricity due to the fact that you're relying on natural sunlight, which is much more effective than your traditional lights that growers are using. We see a lot of sophisticated growers moving towards the greenhouse model. We think that in addition to, obviously, the warehouse model, which we think will continue to be a good business, the greenhouses will be the next big thing, with a lot of experienced operators looking to move into greenhouses. In that greenhouses are typically new construction. We believe that we'll be able to achieve higher rates of return for financing and developing and building out the greenhouses as we do with the traditional warehouse model. Our ambitions in this industry are more than just being a landlord. What we envision is expanding beyond a simple landlord-tenant relationship. We believe that working with licensed operators helps us develop industry relationships, not just with those tenants, but among the community at large. And it's a very small community. And we intend to leverage the opportunities with our tenants to do bigger things. And whether that becomes eventually to acquire them, to roll them up into one larger company with a multi-state grower and retail operations, and or to, as we develop other businesses, to use those tenants as a distribution network. If we have a consumer product, we believe that we could leverage our relationships to push products through their dispensaries. And we find it's a lot easier to work with people if you already have a pre-existing relationship. So from our perspective, the opportunity is not just in terms of accumulating a portfolio of assets, it's accumulating a portfolio of relationships. We believe the future in the marijuana industry is outside of our core. Once business marijuana becomes legal, you'll see interest rates normalize and access to capital of growers, licensed operators start to normalize, which will basically price us out of our opportunity. And so we believe the future is based on research and development. It's based on development of brands and digital properties and marketplaces. So we have an eye towards the future. We understand and we're leveraging, like I said, the opportunity to grow our business and to grow the relationships. Timing is important as we're in a fast-moving industry, and as the regulations change, the opportunities will change as well. We do not know, there's a lot we do not know, and it's important for us to be nimble and to move with the industry. For instance, we don't know once marijuana becomes legal under federal law if the opportunity is going to, if grow is going to start to shift to states where it's cheaper to grow as opposed to continuing to exist in each individual state. So these are some of the challenges that we understand and the industry is facing. Whether or not the current dispensary model exists, tends to exist in the way that it is, as opposed to does marijuana become more akin to cigarettes, and are they sold in different ways, as well as whether or not with research and development we need to have more consistent products in order for the product for marijuana to mature and become more of a consumer product. So with that being said, at MJ Holdings we plan to continue to focus on our core business. We plan to continue to look to the future. We plan to continue to establish relationships and look to leverage those relationships. both for our core business and for new opportunities. And with that, I will open the floor to questions.
Okay, Adam, give me a couple of seconds to queue up the questions.
Sure.
The first question is, we have multiple locations and many clients upstreaming as well as current operators. Do you have a local rep in Colorado?
So we do have we use a realtor in Colorado. Like I said, we also have lawyers in Colorado. The best way to, if you would like to do business with us, is to contact us directly. We have some information obviously on the screen. We have a form at mjholdingsinc.com, both for investors and for people looking to lease property and or sell property to us. Or you can feel free to email us at pr@mjholdingsinc.com, and we'll get back with you directly. If we can avoid working through a realtor, we'll save some money, which will translate into a better deal for the operator.
The second question, Adam, what happens to your long-term business plan if the laws change and it becomes easier for corporations/individuals to obtain financing and lease options? It doesn't seem like they would require the services of your company is offering.
That's exactly right. And I think on the last slide I spent some time discussing that, and we understand and we recognize that our opportunity right now is limited in time. What will happen with our existing portfolio is that we would have the opportunity, and we do have the opportunity, to buy out our note holders. So if cheaper money is available, we would refinance our notes, and then we would in turn look to renegotiate with our tenants so as to be good partners and to not burden them with a higher cost of operations. In essence, we would actually become nothing more than your typical REIT. So our business would still be intact. We still have properties that we're acquiring, and the properties we're acquiring are subject to appraisals. And they're good investments. We're not buying at above market prices, but our cost of capital is higher than typical, as are our leases. So we would have pretty much a master reset. The business would be intact, however the business would be vastly different. And that's why at this point in time what we're doing is we're actually leveraging the relationships. We're looking to capitalize on the relationships with the understanding and having had the discussions with our tenants of the possibility of acquiring them should the laws change and marijuana become legal, and as a public company it would be prudent and legal to do so, and or to roll up several tenants in multiple states with whatever our portfolio is at that time. Moreover, since our tenants have grow facilities and some have dispensaries, we're looking to invest possibly and or start consumer products. We're looking to engage in research and development to help further develop the marijuana plant and develop our own strains. One of the challenges today is that there is no consistency of brand among dispensaries. There's no consistency of product. In order for marijuana to really expand as a consumer product, there has to be more research and development. There has to be more maturity to the product. It has to have a consistent effect. As I understand it, some marijuana will make you paranoid, some may make you hungry, some may give you a buzz that lasts a certain amount of time, some has different medicinal properties that remedies or that are used to treat certain ailments. But there's really not a lot of visibility and or consumer awareness amongst products, and so a lot of money and a lot of time has to be spent in developing that. So at MJ Holdings, we're not just a real estate company. We plan on being a holding company and an operator in a vast array of different opportunities in the marijuana business.
Next question, Adam. Can you talk more about the MedBox relationship?
Sure. We entered into the relationship, I believe it was May 19th of 2014, and the concept was that through MedBox's relationships and client base, they would refer to us parties in need of our services in terms of acquiring real estate for them, and licensing and leasing the property to them. There is a revenue share component to that, as well as for the first months of the relationship, Medbox received warrants in our company.
Next question. Do you provide help to this type of industry?
I'm sorry, do we provide help to this type of industry?
Yes.
Yeah, no, we definitely do. Because marijuana is illegal under federal law, licensed operators do not have access to conventional loans or capital. Moreover, commercial landlords who have bank leverage on their properties, there's a risk to them if they show a marijuana tenant on their rent roll that their loans may be called. And so what we do is we come in and we provide the financial assistance to the industry that they're having a very difficult time finding elsewhere. And so that's what we're really trying to do. We're trying to help grow the industry as well as growing our opportunities in terms of our relationship and our real estate portfolio.
Next question, Adam. Do you offer standard lending to startups and current owners, and at what rates?
Again, we only offer financing currently for real estate, as indicated in the decks and as our filings with the SEC will reflect. The two deals we've done so far are at a 14 and 15% return on capital, and so if we were spending $1 million, we'd be receiving $150,000 a year in rent on a $1 million purchase. We also include 2 and 3% and 2 to 3% annual increases in rent to accommodate for inflation. One of the nice things about us being a fully reporting company is that our terms are filed with the SEC in the way of our past leases, and so there's total transparency and there's a lot of comfort, I think, in terms of operators working with us. They see what the terms are, and they can come and ask for similar comparable terms.
Next question. Do you offer referral commissions? I have multiple properties ranging from 144-acre ranches to 4,000 square feet retail MMJ.
We haven't paid referrals outside of traditional brokers' commissions at this point, but that's something that we can explore, and obviously it would have to be built into the financial model, because we need to achieve our rate of return to satisfy the debt service to our lenders. And so, obviously that is something we can consider, but again, it would have to fit within, our financial model.
Next question.
And contact us. With details. Typically what we like to do, though, is we like to, our preference is to have somebody who needs property come to us, and then we'll help them, identify the property. So if you have someone that actually is interested in any of your properties, whether it's a building or the 144-acre ranch, and they want to get into it but they don't know how to buy it, if you both come to us, I'm sure we can work something out.
Do you have plans to enter the Canadian market?
We've been looking at the, and so it's a great question, and actually it's a question that relates also to our U.S. strategy. There are a handful of companies that have Canadian licenses. There are several hundred, if not close to 1,000, that actually have applications into Health Canada. From my understanding, even though licenses have been awarded and people have been growing, there's still a lot of uncertainty in terms of what the Canadian market and how the operators are allowed to operate. We certainly would be interested in a potential investment from an equity perspective there, assuming that the licenses are already in hand as opposed to simply an application is out to Health Canada. One other thing that I want to that I didn't have an opportunity to expand on within the presentation is that our preference is to work with established operators already who are looking for expansion capital. We have organizations already that have approached us that have been awarded licenses, that have purchase contracts on real estate in hand, where in the state they haven't begun, selling marijuana yet, and the persons are asking us to acquire the property. We'll do that. We feel a lot more comfortable when there is a third-party grower that has experience in the space already, and we'll do those deals certainly. But the preference really is to find someone who already has been growing, who already knows their model, who already knows their margins, who knows what their administrative costs are, and is looking for expansion capital to add additional real dispensaries and or to expand or to move their existing grow to a larger facility.
Next question. What do you see as a major catalyst for your company? And I'm pretty sure favorable legislation is part of that.
Well, I mean, there's 2 points to that question. So one, obviously, legislation would be good for the industry and would basically, obviously, help the industry at large grow. However, regulation probably is not the best for our company, from a core business perspective, because when legalization comes at a federal level and or regulation allows banks to offer financial services to licensed operators, elements of our core business will go away. I can't go into too much detail. Have things that we're working on presently that will be announced in the near term with respect to digital assets that we're co-developing with other persons. We're also exploring different consumer brands, and we see brands as being very important moving forward. As the industry legalizes, we're going to see a vast change in what the market for marijuana looks like. And I touched on it earlier when I said we don't know once legalization comes if you're going to start to see mass migration of grow facilities out of individual states and towards, let's say, a California where they're really good at growing wine. Are we going to see a movement of the industry towards in the northern states near the Great Lakes where water might be cheaper? Or are we going to see a movement of it to the south where you have potentially a lot the weather might be more conducive? So that's one element of questions. Another element of it is we see that there's going to be as the industry legalizes, marijuana is going to become more of a commodity, and it's going to trade at commodity prices. Right now, in each state, we still see supply and demand is out of kilter, and that's why the prices are what they are. In addition to the cost of growing, relative to electricity and water. But once we have legalization, once we start to see how the industry changes, it's very likely that most marijuana will trade at just a few points higher than the grow cost, and that that you'll start to see brands emerging that will start to command a premium. Very analogous to the tobacco industry. You have Altria, which owns Marlboro, which commands a premium price because they have a premium product, and outside of Reynolds, Altria, and Lorillard, you do have a lot of other cigarette companies, but they really don't trade. They don't command a premium, and their products sell at a small premium to traditional tobacco prices. So legalization is going to be very interesting, and that's why I think from my experience, my previous experience in electronic cigarette business, I've learned very quickly in terms of how to be nimble, in a very fast-moving regulatory business. And it's going to be interesting to see in terms of how that all comes to pass.
Next question. Do you expect to see any benefits from the Medbox relationship by the end of first quarter?
So with the Medbox relationship, initially, early on, they sent us a couple of different referrals. One was several retail properties. None of them were really, we weren't able to do a deal on those because the price per property was too low, that the transactional costs would have eaten up most of the profits. The second property they brought to us was an industrial complex with multiple tenants. It wasn't all going to be occupied by a grower, and so the blended rate of return didn't fit within our capital, our requirements within our model. We're still working with Medbox. They're a really great group of people, and we will review any deals they bring us, and if they fit within our model, we'll most certainly consider closing on transactions. But as to whether or not, for me to prognosticate as to whether or not a deal will come to pass, I am not in a position to do that, nor am I able to do that.
Next question. What separates you from your two competitors?
So I'm not sure which two competitors. I know that there's a few competitors out there. I know that there's three obvious ones that I've identified, which is Advanced Cannabis Solutions, Zone Properties, and Cannabis RX. We think that we execute better. We've been in business a shorter period of time than any of them, and we actually have more properties that we've acquired that are currently leased and generating revenue by marijuana operators. Advanced Cannabis Solutions, I believe, from when we were first exploring the business, we looked to them and we saw what their model was. And I believe since then they acquired one property, I think it was in Pueblo, Colorado, for a couple $100,000 that they were going to start building a greenhouse on, I believe in the second or third quarter. I think that's since been delayed. I haven't seen or read of additional acquisitions on their part. I believe that Zone Properties and Cannabis RX, I think neither of them actually own any real estate in Colorado. I think they're focused in Arizona and potentially some other places. One of them, I think, was a real estate company prior to becoming a marijuana real estate company. And while they do have a significant number of properties, none are really, or maybe one might be in the marijuana space. And I believe from reading their financial disclosures, it states their business model is to still to rehabilitate properties and sell them, which is not what our model is, and I think that is still part of their legacy model. And then the other company, like I said, has only properties in Arizona, and I really don't understand how, when Colorado is the epicenter of the legal marijuana world, how you could really be in this business without being engaged in Colorado first and foremost.
Okay, next question. You talked about in the future looking for opportunities outside of your core. As of today, have you had any opportunities outside of your core that you're looking at?
We have. Fast-moving business. There's a lot of opportunity. We see great companies that are looking for capital. During those. Some we're considering more seriously than others. We are also working on developing, certain things which we anticipate and hope will be successful. Obviously, most of which, the startup ones will take a lot of time and effort to get going. Obviously, not material to the business at this point, but we expect them to, be successful, be material in the future. With regard to opportunities that were being presented, those are in terms of making investments in other companies. At this point, we're still trying to figure out if we are comfortable being a minority shareholder in a consumer product, or if it really, in order for it to pique our interest, if we have to own a majority. And so that'll come down to negotiations, and it'll also come down to the right opportunity. But we are definitely exploring opportunities.
Next question. Do you also lease out your digital properties?
No, at this point we're looking to working on a couple of joint ventures to develop digital properties, which may be in the form of marketplaces where I think there's an opportunity moving forward. At this point, in terms of digital properties, I think the question is probably pointed at, do we own domain names that we're looking to lease? Answer to that would be no. We are working with parties to develop online internet businesses and marketplaces and other service-related offerings, which we think will be important to the community of marijuana consumers.
That concludes our last question, Adam. Any closing remarks?
Again, I just want to thank you, Derwin, and your organization for hosting us. I want to thank everybody for listening in. Happy to provide the answers to the questions you have. Moving forward, if you have any further questions or any related to our business, and/or if you have opportunities for us, or if you're a licensed operator that's looking for expansion, please contact us through our website or at PR@MJ Holdings. Investor relations or PR relations, you can reach us there as well, and/or you can contact our PRIR firm at KCSA. Their numbers are on the screen. Again, thank you for including us. It's been an honor and a privilege, and we look forward to doing it again soon.
Well, thank you, Adam. That concludes our presentation. The next presentation